Welcome back. We've got Mr. Bangur joining us now, the MD of Shree Cement on the earnings this time. Mr. Bangur, thanks for joining us. Let's first understand the situation on recovery post the lockdown, how things are looking right now, and whether or not you're seeing rural demand actually aid the recovery as well. What's the situation there? In the context of Q1, volume offtake, of course, has been weak.
Volume offtake in Q1, if we see the actual number of days working, was not as weak as we were expecting. In fact, lockdown started for 30 days somewhere by around 23rd of March. So last quarter was little bit affected for 7 days, but for the first 22 days of April, practically everything was locked down. Different state governments were putting sometime closure, sometime not closure. People were highly scared and no worker would like to come. So the demand, whatever had come in first quarter, was a little bit of surprise. So we had a very good demand period in first quarter. And in fact, we had started early. And for early start, you have to pay additional freight, additional labor cost. So all our costs will be high. But it all resulted in little bit extra profit because our volumes losses were not as high as we were expecting. In the second quarter, the demand is low. Basically, apart from Corona, lot of flood situation is there, especially in Bihar, Assam. Bihar is our big market. So the flood situation is also affecting. But maybe in 10 days' time, things will improve.
Okay. Operationally, you haven't seen much cost reduction, unlike some of your peers. Can we expect some cost savings going forward? Are you looking at that?
Now, cost saving means earlier your cost had to be high. We were always lean and we will do whatever best is possible. But big cost reduction in overheads or power cost, I don't think so. Cost reduction will take place only by more production and overall per ton cost will come down. And compared to the first quarter, because of lesser number of lockdown, production in second quarter will be definitely better compared to first. And third quarter onward, I expect near normal working.
Right. Mr. Bangur, I want to understand where exactly is the pricing power headed for the cement industry? Because now that monsoon is over, economy is also be coming back. So are we in a period or a patch where the cement pricing is going to be at a substantial premium to what we've seen in a long time? Because A, the post-monsoon demand, B, the demand which got hampered because of lockdown. Both these demand factors would suddenly be unleashing.
Pricing will not be very high. Overall capacity overhang is there, but it should be improved in the pricing. It will be about 3 to 4% every year. Which has been in the low traditional trade. A small patch of good prices or bad prices will come, but even the price will increase, we can expect 3 to 4%. That is a 20-year, 20-year, which is a little bit less than inflation. Rest of the money has to be recovered by new efficiency. So this year will be no exception. I expect only 3 to 4% average price check compared to last year.
So how soon do you think you would be able to go back to your pre-COVID utilizations?
Pre-COVID utilization is totally unknown, but as we expect The residuation is there, feasibility less, and overall, we have seen from UK and other critical experience, one of the key is this, and we start reduction. So I feel by end of October or by October or December, things will start normalizing, and then the peak COVID realization level will come. It will take at least 2 parts of the
Mr. Bangur, one very important aspect which we need to understand is that how the dynamics of the industry would change now that a lot of coal mining will start in India. How will this change life for Shree Cement?
No, coal mining is a totally different business. And coal mining, if it is profitable or not, will not affect the cement industry at all. Earlier also the coal mining had started. Unfortunately, it was taken back. But that is no threat. Coal is a different and mining is a different segment. If some company thinks that coal mining should be added to cement, then it is not a fair working. Coal mining itself is a challenging business, and it is not going to change any of the cement industry dynamics.
Sure. Mr. Bangur, if you could just help us understand what kind of volume offtake are you penciling in for not just Shree Cement but for the overall industry as well going forward, and whether or not it's likely to pick up, and if so, by when?
This year, the volume losses will compared to last year. First quarter average volume losses is around 50%. So overall, I expect yearly losses in volume for the industry to be 8 to 10% because some makeup will be there. So next year we will have a good growth because of the low base of this year and 2 years pent-up demand. So this year I expect to end at minus 10% as the industry, and next year another 10 to 15%.
Sure, we've, I think, got you on a bit of a patchy line. Help us understand what sort of... Okay, we'll thank you, Mr. Bangur, on that note. Thank you so much for taking the time out and speaking with us today. Good to get in that perspective on where the cement industry as well as Shree Cement in particular is